All right, let's jump right into it. We're tackling what some are calling the great commodities debate. These are the raw materials that literally build and power our world. And right now, the headlines about them are getting, well, pretty wild.
I mean, just look at this. Market analysts are throwing out some absolutely insane numbers. We're talking about predictions that see gold practically doubling, silver soaring. And it's not just the precious metals. These forecasts point to a seismic shift across the entire market.
And that really is the million-dollar question, isn't it? Is this the start of a decade-long boom, a so-called supercycle? Or are we just caught up in some kind of temporary speculative fever? To even begin to answer that, we've got to start with the basics.
So before we can weigh the arguments from the bulls and the bears, we all need to be on the same page. Let's do a quick run-through of what we're even talking about when we say commodities and how investors actually get in on the action.
It's actually pretty simple. Commodities are the basic goods that get used in commerce. They are the fundamental building blocks of the entire global economy. We're talking about the energy that heats our homes, the metals inside our phones, the food on our plates. Real, tangible, physical stuff. So how do you invest in this stuff? Well, you could go out and buy gold bars and stash them somewhere, but, that comes with its own headaches. For most people, it's done through financial markets. You've got futures contracts, which are a direct bet on the price. You could buy stocks in the companies that mine or produce the stuff, or you can buy into funds, like ETFs, that track a single commodity or a whole basket of them. And here is the classic dilemma every investor faces with commodities. On the one hand, they can be a fantastic way to protect your money from inflation and add some real diversification to your portfolio, because their prices often do their own thing, separate from stocks and bonds. But on the other hand, they can be wildly volatile. And unlike stocks, they don't pay you anything just for holding them, no dividends. Your entire return comes from the price going up. That's it. Okay, now that we've got that foundation, let's get to the really exciting part. We're going to start with the bull case, the argument that says we are standing at the very beginning of a massive, long-term commodities boom. The heart of the bull case really comes down to this idea of a coiled spring. Think about it. For more than a decade, from about 2008 to 2020, this whole sector was just dead in the water. Prices were low, nobody was investing, and people lost interest. But all that time, beneath the surface, all this energy was building up. And now, the bulls believe that spring has finally been released. Now, this is where it gets really interesting, because the technical analysts see this whole thing playing out in very specific weaves. The last supercycle you'll remember was all about China's big boom. When that ended, we got the long hibernation. Then, in late 2020, we saw the first breakout. That was wave 1. After a couple of years of pulling back, they believe wave 3, which is supposed to be the most powerful phase, is literally just getting started right now. And the bulls argue that this cycle is completely different from the last one. You see, the last one was fueled by abundance. Think cheap labor, expanding global supply chains, all that. This new one, they say, is driven by the exact opposite: scarcity, pure necessity, and the massive, massive cost of rebuilding our energy infrastructure from the ground up. And right here, you can see how all these forces are coming together to create what looks like a perfect storm. The green energy transition requires just staggering amounts of new metals. Central banks all over the world are gobbling up gold. All those years of underinvestment means supply is incredibly tight. And as the world gets more fractured, countries are scrambling to lock down their own resource supplies. And hey, don't just take my word for it. This isn't some fringe theory. We're talking about major institutions putting out some truly eye-popping price targets. Bank of America calling for $5,000 gold. Goldman's huge call on copper. This shows you there's real conviction building among some of the biggest players in finance. So that's the case for the supercycle, and you have to admit, it's pretty powerful. But it's not the only story being told. When you start looking at what other major global institutions are saying, well, the picture gets a whole lot more complicated. Take the World Bank, for example. They have a completely different take. They're actually forecasting that overall commodity prices are going to fall by 7% in 2026, mostly because of a drop in energy prices. The only bright spot they really see is a pretty tiny gain in precious metals. And they're not mincing words here. They see a slowing global economy and plenty of oil supply pushing prices down, continuing a trend that's already been going on for years. This is, the complete and total opposite of a supercycle breakout. And this is the real puzzle, right? How can one group of really smart people see a historic boom
while another group of equally smart people sees a continued slide. The answer might be that they're both kind of right. And to understand this paradox, the story of lithium is the perfect place to start. 85%. That's how much the price of lithium carbonate, the key ingredient in EV batteries, has collapsed since its peak. So if we're in a green metals supercycle, how on earth does something like that happen? And there it is, the paradox in a nutshell. Literally everyone agrees that long-term demand for lithium is going to be astronomical. But in the short term, a huge surge in supply from new mines just completely flooded the market, and prices crashed. This tells us something absolutely critical. The long-term story and the short-term reality can be two very, very different things. Okay, so we've seen the roaring bull case, and we've gotten the sobering reality check. How do we put all these pieces together into a picture that actually makes sense? Let's try to distill this down into a few key takeaways. And here it is. This is probably the most important insight. The smart money is starting to realize this is not like the 2000s supercycle where, a rising tide just lifted all boats. This is something new. It's a differentiated cycle where a few specific commodities are set to absolutely boom, while others might just tread water or even fall. So what does all this mean for you if you're watching these markets? First, the real story seems to be centered on transition materials, the stuff we need for decarbonization, like copper and lithium. Second, the real driver here is long-term structural scarcity, not just short-term hype. But third, and you have to remember this, expect some crazy volatility along the way. Just look at what happened to lithium. And finally, and maybe most importantly, you just can't treat commodities as one single thing anymore. Each one has its own unique story. Which really brings us back to this final big question. As we head into a new era, one that's going to be defined by physical limits and competition for resources, where do these essential materials fit in? Are they a strategic cornerstone for a long-term portfolio, or are they just a wild speculative gamble? That right there is the great commodities debate.